This is Best Day for Tuesday, October 26th. I'm John Weber. Topping our report, Canadian Underwriter is reporting that new expectations born from the global financial crisis are spurring several trends in risk management, including the hiring of chief risk officers. Vanessa Mariga from Canadian Underwriter joins us now from the company's Toronto headquarters to talk more about the findings. Vanessa, the story in Canadian Underwriter says that some insurers in the property casualty sector are leading the way in creating a new corporate culture of risk. Tell us what you found.
Well, John, it seems that insurers are starting to view risk management as more than just fulfilling regulatory requirements and are really starting to see some of the benefits that a robust earn program can have on their bottom line.
Can you give us a few examples?
Sure, it appears that insurers are really strengthening their board governance processes. So now boards are being required to review and approve an insurer's risk management tools. This might include things like dynamic capital adequacy tests, internal capital target setting, reinsurance management programs, and other stress test models. Additionally, we're also starting to see the creation of risk management committees. These are committees that would report to the CEO, audit committees, or the board of directors on an ongoing basis.
Is this the result of the financial crisis?
You know, I think that's a really tricky one to gauge. One thing that we really do need to keep in mind is that the Office of the Superintendent of Financial Institutions, or OSFI as we fondly call it, that's our federal regulator, had been calling on insurers to strengthen their earn programs long before the financial crisis. Now, while the crisis certainly highlighted the need for strengthening of earn, I think that it's fair to say that this sort of thing was really on our regulators' radar long before the crisis even occurred.
Now, it would appear that the chief risk officer is playing a more important role than ever before in the wake of the financial crisis.
Yeah, you know, I think that's a fair observation. Craig Harris, while researching our September cover story, Building Blocks, learned that 3 of Canada's top primary insurers, as ranked by net premium written, had created a chief risk officer position within the past 2 years. I think we also need to mention, though, that Zurich in Canada has had a CRO position in place for roughly 15 years. What's interesting, though, is that a lot of these insurers are subsidiaries or branches of European-based parent companies. While these parent companies had CROs at the global group level, now we're actually starting to see the creation at the local level here right in the Canadian marketplace. But, you know, it wasn't that long ago, I guess it was around November, December of last year, that OSFI actually expressed its concern that while the Canadian P&C industry was certainly ahead of other sectors in terms of implementation of ERM, it was actually lagging in the creation and implementation of chief risk officer positions. Hopefully we will see the positive momentum continue, though. It's definitely a step in the right direction.
And tell us about some of the stress testing that's taking place in the industry.
Well, in December 2009, OSFI issued a guideline that basically widened the parameters of how and what insurers are expected to test and measure. In a nutshell, this new guideline highlighted 5 areas that now require greater scrutiny. These areas include things like collateral use, counterparty credit risk, reputation risk, risk concentration, and securitization. You know, what's interesting, though, is some of the insurers and reinsurers that we've been chatting with have been telling us that they're now using stress testing for things beyond just regulatory compliance. So they're actually applying it to things like business decisions and strategic purposes.
Do you have any specific examples?
Well, Alistair Campbell, he's the president and CEO of Zurich in Canada, told Craig Harris about that organization's top-down risk assessment model. So it's my understanding that this model allows you to take a set of variables that might change on a regular basis and then push them down through the various levels of a company or organization. So while a specific risk might not have a big impact at the global group level, as you push it down through the organization, by the time that you get to the local level, that impact might be huge. So that's just one example of some of the creative approaches to stress testing that we're seeing in our marketplace today.
Canadian Underwriter's Vanessa Mariga. In other news, a New York judge held former AIG chief executive Maurice Hank Greenberg liable for damages on a reinsurance transaction that State Attorney General Andrew Cuomo said helped the insurer hide losses. The same judge also found former Chief Financial Officer Howard Smith liable on the transaction, which involved an entity called a Capco Reinsurance Company. It was allegedly used to hide more than $200 million of losses from an auto warranty insurance program. The judge, however, denied Cuomo's request for a judgment against both defendants over a transaction involving General Re Corporation to boost AIG loss reserves by $500 million without transferring risk. The UK Treasury said the government is committed to spending £1.5 billion to policyholders of failed life insurer Equitable Life Association. £1 billion of that amount will be paid over the first 3 years of the spending review period. The Treasury says the figure is based on a relative loss figure of £4.3 billion, the difference between what Equitable Life policyholders who invested beginning in 1992 received from their policies and what they would have received if they had invested elsewhere. And the Singapore Monetary Authority reports that rising financial burdens on Singapore's residents, combined with a lack of awareness of adequate coverage, have caused domestic uninsured or underinsured problems that insurers could address by providing affordable protection plans with simple terms. Studies commissioned by the insurance industry suggest that Singapore residents are underinsured, with the 30 to 39-year age group the worst off, as this group tends to have heavier financial commitments and more dependents. They find that the cost of having to pay insured premiums a stretch, according to Goh Chok Tong, Singapore's senior minister and chairman of MAS, who said that at a recent conference. On the daybook, the Vermont Captive Insurance Association holds its Strategic Advantages of Captive Insurance Conference today in Houston, Texas. The Property Casualty Insurers Association of America's annual meeting continues through tomorrow in Colorado Springs, Colorado. And Mount Hawley Insurance Company, headquartered in Peoria, Illinois, and A-rated by AM Best, marks its 31st year of incorporation today. And now for the job of the day from the Best Day News Insurance Job Connection. An AM Best rated insurance company is currently looking for a vice president of agricultural and commercial underwriting for its upstate New York office. For more information about this job and more than 2,000 other jobs for insurance professionals, visit jobs.bestdaynews.com. Finally, the latest edition of Best Day Audio features Oklahoma Insurance Commissioner Kim Holland, who is fighting for election to a second term against insurance veteran John Doak. They each spoke with Washington correspondent Sean Carr about their priorities should they be elected. Also included in the cast, Alan Rutkin, a partner in the law firm of Rivkin Radler, who discusses why insurance claims are often difficult to settle. To hear those interviews, log on to ambest.com/audio. That's our report. Thanks for watching. You can follow these developments at bestdaynews.com. Join us again tomorrow for our next video edition of Best Day.
Sponsorships are now available for Best Day Video, AM Best's daily insurance newscast. To learn how you can take advantage of this opportunity, email advertising_sales@ambest.com or call 908-439-2200, extension 5399.